Hello, this is Will Allen with Sentara Capital. In today's market update, we are going to take a look at some of the recent jobs data, which has definitely been weakening. We're also going to look at the stock market now that we are in September, which historically is the toughest month of the year. We're going to look under the hood here to see two very important data sources to see if they can give us clues as to where the markets will go going forward. Let's dive into it. All right, now before I get into the market update, just a reminder to like and subscribe. And listen, we are just a couple subscribers short of 100, which look, this is for fun anyway, not a big deal, but it's a nice little milestone. If you haven't subscribed, go ahead and subscribe. We can get over 100. We appreciate it. And don't forget to share with friends. And by the way, this year, quite a few of you have shared these videos with friends. That we are very thankful for that. Keep on doing that. All right, so let's talk about our market update now. And in just a minute, we're going to look at how the markets have started September. It hasn't been very good. In September, I will say in our household, now we're getting into fall, and that means football season has started. We're huge fans. We're watching college football and the NFL. My older two sons are in a fantasy league with me, and they do much better than me now, which I'm not happy about. But nonetheless, we're going to get into that topic about the markets in a few minutes. We're going to start off, though, with the jobs market, because this past Friday, we got another jobs report for the month of August. Now, I want to step back here and remind you that last month, when we were on August 2nd, when we got the jobs report for July, it came in at 114,000 jobs, which really rattled the markets. The unemployment rate went from 4.1 to 4.3%. There was a big sell-off. We did a video that day, a kind of breaking news video where we talked about that jobs report. Now, fast forward to this past Friday, we got the most recent update. What we found out was that 142,000 jobs were created in August. This came in at less than expected. If you take a look at the jobs gains going back to the start of 2022 each month, what you will notice here is that the last 4 or 5 months, clearly there have been fewer jobs added than what we had seen in 22, 23, and even the start of 2024. Another issue of note has been that we've had jobs revisions almost every month. Friday, we found out that the July numbers, which were originally 114,000 jobs created, had dropped to 89,000 jobs, so a 25,000 job reduction. And if you take a look at the jobs revisions going back, this goes back to 2021, and what you will notice there is that for a long time, there were job revisions were higher, okay? That has not been the case in 2024, and especially not in the last 6 months or so. Almost every month there have been jobs reduced for previous months. So this is something that we are keeping an eye on. And like we said, clearly the jobs market is weakening, but we thought we need to look at some more data to see where the jobs market is and see if we can get a better picture. So we have some other information that we're going to show you. Now, the first thing we wanted to put up there is something that takes a look at, going back to 1945, every recession that has taken place. And we wanted to see what has the jobs market and jobs gain, the non-farm payrolls looked like in the 12 months leading up to a recession and in the immediate 12 months. So if we put that up, what you will notice in the middle of that chart, you see 0, okay? Everything to the left of it is 12 months from the recession up to 0 when the recession begins, and then the first 12 months in recession. What you'll see on the left-hand side of 0, there were jobs gained in advance of the recession. But when the recession begins, almost all the time, you are seeing job losses. Well, if you go back to that chart we talked about a few minutes ago, we are not losing jobs right now. 89,000 jobs created in July, 142,000 created in August. That is not job losses. So we're going to be tracking this closely in the next couple months to see what the payrolls numbers look like. Now, the next chart we're going to go over looks at, in the August jobs report, the breakdown per industry of jobs created or lost. And when we put that up, what you will notice here, at the bottom, the blue bars to the left, those are jobs lost in manufacturing, retail, trade, and information. Then when you look at natural resources, mining, federal government, other services, that was basically break even. What I want to turn your attention to is on the right near the top, you got leisure and hospitality, healthcare and social assistance. And then the third point, construction, around 34,000 jobs added. This is important because we've talked about in the past that the construction industry is highly correlated to if the economy is growing or if we're in a recession. When construction, we start to see a lot of jobs lost there. That is not good news. And as we see here, last month, that category was the third best as far as jobs created. We like to see that. The last chart on the job part, job openings versus unemployed people who are actively looking for work. We went over this in our last video 2 weeks ago, but we've gotten new information, so we're going to give that to you. And what you will notice here, job openings are in blue, unemployed people looking for work are in black. And you will notice that these two have come very close together after a period of time here the last couple of years where there were a lot more job openings than there were people actively looking for work. This is very close to going break even. But look at on the left-hand side from 2000 up until about 2017, during that period, there were a lot more people looking for work than job openings. And outside of the two recession periods, there was some very good economic times. So what we're talking about here is that, yes, clearly job openings have been coming down and unemployed people have been going up, but the levels they're at now is okay. It is not a sign of a huge gap, a lot more people looking for work than job openings. That would be concerning, and we don't see that now. All right, our next topic, we are talking about the stock market. The first couple of days of September was not very good. The market dropped between 4 and 6%, depending on which index you're taking a look at. And in the last day or two, it has bounced back a little bit, but historically, we know that September is generally not very friendly to the markets. When you look at the average monthly return going back from 1928 through 2024, you will notice here that September is the only month where the market is down of note. February down on average 0.1%, that's very low. September down 1.2% on average. Again, that's over nearly 100 years. You'll notice to the right of there that October starts to bounce back, and then November or December are both very, very strong. So it is not surprised that volatility has picked up here the first couple weeks of September and the markets have gone down a little bit. I also want to highlight something that we have touched on in August, and we talked about this last year, and we'll put this back up for those who haven't seen it before. This is the S&P 500 the last 5 years. On the left, you'll see the largest drawdown between August 1st, September 30th. What we're talking about when we say drawdown is the biggest decline that happened anywhere in this 2-month period. And you can see on average, the last 5 years has been down about 8.7%. On the right side, the performance in the fourth quarter, you'll see has been very, very good. The last 5 years, on average, up nearly 10%. So it is not a surprise again that September has started off not very well for the markets. We view any declines in September as typically being good buying opportunities if the declines are large enough. Now, let's talk about where the markets could be going in the months ahead. And of course, we don't have any crystal ball for this, which we did, but we do not. But typically we've said in the long run, the markets go where company earnings go, and how the economy's doing plays a big part in that. So the chart we're going to go over right now is looking at economists' forecasts for what the U.S. economy is going to grow in 2024. So GDP, gross domestic product. What you can notice here is that this is sitting at 2.5% right now over on the far right. That is the best number since economists starting to give forecasts for 2024. Over on the left-hand side at the start of 2022, you can see it was up north of 2%. And then in 2022, in the first half of 2023, when economists thought there was going to be a recession in 23 and that 24 would not go very well, the forecast really dropped. Then, since basically last summer, this has been steadily going higher, and again, financial markets have done well over that time period. So this is good news that right now economists are saying, hey, for this calendar year, the U.S. economy is going to grow at north of 2.5%. Now, the next chart is taking a look at what forecasts are for earnings for companies in the S&P 500. The 500 biggest companies in the United States, more or less, is what we're talking about here. And this goes back to December of 2021. And what you will notice is this is what economists think the next 12 months at the given time are going to produce as far as earnings. Notice in 2022, this went up for a little while and then started declining, and that was during a period where the stock market was not doing well and where economists thought earnings were going to do very poorly going forward. But since we got into 2023, this has been steadily rising. Look at that, almost nonstop, to the point right now analysts are saying over the next 12 months, $264 of earnings. Now, we don't know yet whether that's where earnings are going to come in 12 months from now. But what this tells you is that analysts are saying, despite the fact that the jobs market has weakened a little bit, the economy has weakened a little bit from its very great pace that it had of growth in 22 and 23. But this is saying that with all those factors taken into consideration, analysts still believe that companies' profits are going to continue to grow over the next 12 months. So we are going to be watching this data very closely again in the months to come. All right, so just to recap, we talked about the fact that the jobs report for August came in at 142,000 jobs. That was lower than forecast, but was up significantly from the 89,000 jobs created the previous month. We talked about the fact that job revisions have consistently been lower these last 6 or 7 months. We want to see that trend reverse in the months to come. A positive sign in the 142,000 jobs created were the fact that construction jobs were up almost 34,000. That was the third best of any industry, and that is a very important group with regards to the performance of the U.S. economy. We looked at the start of September in the stock market. It has not done very well, but that's not a surprise. September has been the worst month historically, going back to 1928. When we dive deeper and look at where could the market be heading in the next 6 or 12 months, two big positives. One, the economic growth rate for 2024 is at the highest point so far in terms of the forecast at 2.5% growth in the U.S. And when we look at earnings per share in the S&P 500, it is sitting at $264 over the next 12 months. That is also the highest figure that analysts have had at any point in the last 3 years. Thanks again for watching. We'll be back in 2 weeks with our next update. Take care. Hey, if you are a client and you have made it this far, thank you so much. We appreciate you watching, and we also appreciate you sharing with friends. Also, if you have not subscribed, don't forget to go ahead and do so. That will push us over 100, a nice little milestone for us to hit. If you are new to Sentara, if you have not seen our videos before, you can head on over to our website, sentaracapital.com. We have a 3-meeting process that we have with potential new clients to see if it's a good fit for both sides. We like to give clients the kind of information you see here on our videos every 2 weeks to make sure they are informed. Thanks a lot and take care.